Good evening and welcome to the Trading the Tech Show. My name is Derek and this is iLi Academy. And we had a wonderful day today, this Wednesday, January 20th, 2021, Inauguration Day for Joe Biden's presidency and a very new administration taking over. So fortunately, today was without any crazy events. It seemed like everything kind of went off without a hitch. So I think I think we're okay for at least right now. You just never know. But it's good that today went off without a hitch. I think it's a great day for democracy. And, it's just a proof that the U.S. system is still alive and well and working. And it kind of feels good at this point to know that things were fairly civil today and not out of hand like, they could have been. It very, very well, it could have been. So I think maybe hopefully we've reached a turning point where people are understanding what exactly is occurring. And, we didn't have any more unrest. And hopefully this year coming, we'll have some great things happen that get us kind of back on track. The market today, the Dow Jones was actually excited about the inauguration. I think there was a sigh of relief that the things did go off pretty well all day today. Pretty much, we were on an upward swing. Just kind of slowly but gradually moving up. The Dow closed up 257.86 points to 31,188.38. So this morning, when we were looking at the futures on the daily market overview show, the futures, that was at like 5 in the morning Eastern time, but they were really only up very slightly. I think it was like 46 or something like that, 46 points. And as our show kind of went on, it did rise. I remember it seeing it about 67 or so, 65 or 67, something like that. And we didn't quite cross that 100-point threshold at that point in time. And then, as far as the day, we did actually continue on up. So I think there was a little trepidation in the beginning or kind of overnight. Traders probably were a little bit skittish trying to see what everybody else was going to do. And then when they kind of figured it out, then we ended up pretty bullish. The S&P 500 closed at 3,851, and that was up 1.39%. The NASDAQ closed at 13,457.25. That was up almost 2% at 1.97. The Russell 2000 closed at 2160.62, up just shy of 0.5% at 0.44. So I talked about this, I think this morning, when we have a new president, typically we have an up year for the markets in the U.S. because there's that optimism that's there. So, maybe today is just a foreshadowing of what is to come. Some analysts are saying that we could double the market, over the next so many years. We might even double it. I'm not quite that optimistic. We've been in this bull trend for quite a long time here. All good things do come to an end at some point. It just looks like the appetite for that to happen is not necessarily right now. But I wouldn't personally, I don't think I'd be pouring money into the market at the top. It's just not something that I feel like that, would make sense for me to do. I'd rather, save those chips, maybe whatever you're getting from your Bitcoin or however you're kind of making that now, and just save it for a rainy day. I don't have to get it now. I can get it when the rainy day comes. And because that's the time to buy. When there's blood in the street is when you want to buy. So, for me, I don't think it would be something I would jump on board with right now. I'd probably just take that money, funnel it into my Forex and keep making some money. And then when the rainy day comes, I'll have the funds to actually, to invest stock market wise, because things will be relatively, quite cheap. So, I'd be looking for some type of pullback there in the market to actually get us, in a good position to win in that market as well. So let's do this. Let's jump right in. Let's start looking at our charts. Let's just kind of go over them and see, what it is that, appeared as opportunities today and what things we might be looking for as more opportunity. We're on our Aussie CAD chart right now. We're just going to go top to bottom again tonight. I think it's fine for us to do that. Aussie CAD on this 30-minute chart, we can see where our 720 is. All of the moving averages, except for the 200, are below that 720. And so the 100 just jumped below there at the beginning of the trading day, kind of the end of yesterday, beginning of today's trading day. We traded well below the 720 here, as far as our lows go. We reached down here well below 97.70s area, right into the 97.72, 97.73 area. But we did kind of get a breakout bounce a little bit here. We kind of created a low. We bounced here, kind of arched over, came back down, tested the low, didn't break, and then traded off to the upside. So that's kind of breakout bounce, right? So we created the low, bounced, kind of rolled around here, came back down to test that low, and when it didn't break, we traded off to the upside. So, that was the opportunity for breakout bounce, which doesn't really take into account the 720. It's not written that way. The strategy is not written that way, so we don't really analyze it that way. But the trend strategy we do, because we always want to kind of be trading along with the trend. And so so the order that we have here, this buy that we have on was based on this 200, because originally we were above our 720. Today, as the markets, or yesterday anyway, it's not today anymore, but yesterday as the market, was trading, we did trade back through this 720, but we don't worry about it because we sized the position correctly. This particular account is at a 0.01 lot size. It's really just kind of my test account for when I'm, testing things in a live market. So I really don't, I don't put a lot into, trying to grow the account. Yeah. But at the same time, I don't worry about the account at all. I really just don't worry about it because it's, it's profitable. It just does its thing. If we have a trade that goes against us a little bit like that, we don't have to really worry about this spike down. You can see that we did retrace probably about 50% of this move so far. Matter of fact, let's throw the Fibonacci on it and take a look. From this high to this low, yeah, we traded just over 50%. So we're kind of between the 50, almost up to the 61.8% retracement mark at some point there. So, so we did retrace a lot of that move. So a lot of times this is what will happen in the Forex market. I feel like, and I always say that the Forex market is extremely forgiving. And what I mean by that is a lot of times if there's a huge move one way or another, it's going to retrace that move. Or it's going to come back probably to your entry point. A lot of times it'll come back right to your entry point and then, and then trade away. It happens like that a lot. So, but you get that opportunity to kind of pair that loss. And that's why I'm saying, there's a lot of people that tell you be quick to cut your losses, but it doesn't make sense for me. I don't feel like it makes sense for me in the Forex market because it's so forgiving that way. There's a lot of times when that's just going to come back for you, and it's going to help you recover some of what was lost. Because we know the Forex market, it'll run away from you really quickly, something maybe that you didn't expect to happen, and then it kind of comes back, right? So this is kind of the case here, right? So we kind of jumped out of, this little range that we're in. We fell down pretty quickly here based on probably some fundamental news. And then boom, we started to head back to where we were. So I wouldn't be surprised if we go back up here and this trade is profitable. It just takes a little bit of patience. If I was trading in the stock market, typically when you're trading in the stock market, you don't just ditch a trade just because it went against you. All your trades are going to start out against you anyway, just because of the spread. And people don't just ditch it the same day. People will hold on to a trade or hold on to a position for years at a time. So we've got to adopt a little bit of that in our psyche when it comes to Forex. You kind of hold on to your trades a little bit. And a lot of times those trades that you would have taken losses on will be profitable. But there's something about Forex where people feel this need to exit trades extremely quickly. And it has to be profitable within this amount of time, or I've got to get out and do something else. But if you get out and do that something else, you've lost money, and there's no guarantee that that something else is going to make you money. So now you might compound it instead of, being patient. And if you could be patient, you would be able to actually gain on your pair. So let's go here. Well, looking at this now, I guess my entry here for the trade would be on this 200 still. If I was not executed into this trade, I'd be improving this order along with this 200 because my long-term moving average is still above my 720. That's where I would be buying. As far as the Aussie yen, you can see that we're trading above our 720 here. We're going to see this kind of repeat in some of our Aussie pairs where we're starting to get a move to the upside. We've got the 200 and the 100 kind of crossing over one another right now. The 100 is kind of crossing that 200, about to give us a mature trend to the upside. So as we start to get some momentum to the upside, we should get some distance between our moving averages is kind of what we're looking for. And then we're going to wait on our pullback to our 50 or our 100. It's not quite ready yet. Here's our Aussie New Zealand. You can see that we are trading well above our 720 here. So and the rate is below the 200. All the moving averages are below the are above the 720. So we're bullish, but our rate is actually trading below our 200. So I've got this buy stop order here that was sitting there based on my 50 and my 100 here. So what I'm going to do, I'm going to take this and grab it, and I'm going to slide it down and improve that order to where my 200 is, because now my rate is down here below my 200. So I can improve the rate. So this is what I mean. So it's a good thing that you were able to see that. Now you can see here, this signature effects auto trader, you can see these green arrows. All of these are buy orders. So the signature effects uses my 50 moving average as the place where it places its order. So every hour or so, I think it's set for every hour, this order will kind of cancel itself if it's not executed. And if the parameter is the same, it will execute a new order. And you can see how it's improving the price. You can see how it's running down, and it's improving the price. So, I moved this one down physically, but if I didn't move it down physically, it would continue to follow this 50, as an automatic, the auto trader is going to kind of improve that order until, the parameter is no longer in force. And I can change the time frame for this too. I can make it half a day. I can make it a day. I can make it a week. I can make it 2 days. I can make it whatever I want this to be, however long I want this order to last before it cancels itself. So I can leave and say, okay, if it's 24 hours, maybe make it 24 hours. And, so the order can last for 1 day. If it's not executed after 1 day, it disappears. All right. Aussie US, we are trading above our 720 here. All of our moving averages are in order to the upside. So we've got mature trend. We're just waiting on a pullback now past our 50 or past our 100. So hopefully this will grow into a deeper trend and mature even more. Kind of like what we see here in our CAD yen. Our CAD yen, we're trading here well above our 720 here. All of our moving averages are in order to the upside. We've got full mature trend. We're just waiting for pullbacks past our 50 or past our 100 at this point. Swiss yen, we're trading below our 720. We've got our moving averages pretty much in order to the downside. The 8 just kind of did jump over the 21, but we can still say this is a full trend to the downside. And so we're waiting on a pullback past this 50 or past the 100, and we seem to be headed that way. So that's something maybe you would put in your journal and say, be aware that maybe the Swiss yen might give us an opportunity past the 50. As far as the Euro Aussie, we are trading here under our 720. We're trading well below our 720, right? All the moving averages, the rate is below the 720. We did create a new low here, so we can watch this. We created a new low. We did bounce and kind of end around here, and now we're testing that same area. If we don't break this and we start to head off to the upside, we may have a breakout bounce trade. So I'm going to go ahead and draw my little rectangle kind of up in here. Basically, right around the bottom of where it kind of arches over is going to be my top. So I'm going to say like somewhere in this area here is going to be my entry point. The bottom is kind of random. You can kind of pick the bottom, but I just kind of like to get an area that's kind of right near that archway. I don't like to, have it all the way down here. But there's no ruling and saying how much of this rectangle you have to draw. I just like the bottom of it to be like right under where the rate kind of rolls over. And so my first entry point is going to be like right around here. That's giving me enough room for this to kind of bounce and give us some real direction before we get into the trade, because this is going to be a pending order too. This is my first area of entry, and this is my second area of entry. So depending on how conservative I want to be with just a few more pips, I may pick this top and say, once it gets to this level, then I'm interested in buying. If this continues down and creates a new low, then we can delete the trade. We close it. We don't have breakout bounce anymore. Now, we will be waiting on a pullback. We probably will get something similar to that because we're going to be waiting on our pullback to our 50 or to our 100, right? So that might, we might keep an eye on this. We might get 2 trades out of it. We might get the breakout bounce up to the upside as it trades back towards the 50. And then, we might take that trade, since we want to trade in direction of trend, we might cut that early and then trade in direction of trend based on the movement past our 50. So there could be a couple opportunities there. Euro CAD's kind of going to be the same thing. You can see our 720 peeking out at the top here, just at the, start of the day. It started to kind of get down here on the chart. We're trading well below the 720. As far as the moving averages go, we've got full mature trend. We're just waiting on a pullback to our 50 or to our 100. We came here, we kind of arched around here, but we didn't kind of break the low. So, we could be taking an order there. We might be already involved in an order here if we took the first order, and we're pretty much near the archway. So that could be a breakout bounce trade for us as well. Euro Swiss, we're trading well below our 720. So right now the rate is jumped over our 200. So if I'm placing an order here, my 100 is kind of close. So I think my 50 is kind of close because it's there in blue. My yellow 100 here is sitting right here at about 107.73. So that's where I would short for my Euro Swiss. So I just right click, go to trading, and then drop my sell stop here. Euro Pound, we can see that we're trading well below our 720 here, right? So we've got our moving averages in order to the downside here. We've got full mature trend, even though it's kind of, the 8 is kind of, not too far away from our 21 at this point in time, but we're getting that pullback towards the 50 and then maybe towards the 100. If we get that, then our opportunity is going to be to short here. So we got a couple of these today that were really nice trades for us. We actually caught these moves headed down on some of the auto traders, which was pretty good. As far as Euro Yen goes, we're trading below our 720, kind of the same thing. Right now, we're just touching our 50 here. We're just kind of getting to that area. As we pull back past the 50 or the 100, we can short at those levels. If you use the 21, this is the place where you're going to place that short. If you look here, we kind of had that breakout bounce situation, right? We created a low. We bounced around, we tested the low, and we didn't break it, and we traded off to the upside. It's just a pattern that I could see a lot. And so that's the reason why I like it. We have it kind of in an inverse place right here as well. Here, I'm going to walk you through this here. So we created a high. We bounced here, we created kind of the dip or the cup. We came back and we actually surpassed this previous high. So we didn't get a breakout bounce kind of in the opposite direction here, but we created a new high here. We came down, we kind of ended around, we went back and we tested the high. And so we could have shorted down here based on this, based on the archway kind of here. It's just kind of inverted, right? We came up here, we did kind of the same movement again. We got it a second time where we actually created a new high, or we created the high, we tested the high, we started to trade away, but then we went back around, tested it again, it failed, and then we fell precipitously. So we kind of got 2 of them at the same time here. It falling away like that the second time, we kind of got that. So typically it's only 1 time, but every once in a while you get those 2. But even if we had taken the order maybe in here where we shorted, even if we had done so, I just talked about us being patient. We don't panic out because there's no change in direction here. The rate's not above our 720. The moving averages aren't above our 720. So our preferred direction is still to the downside. So we don't have to really second guess our trade here. We don't have to think about it and go, oh, I wonder if I'm wrong. We know what direction is. And so we just kind of wait for the market to kind of catch up to where our knowledge is at, right? We kind of trust the knowledge that we gain, right, from understanding the moving averages. And it would pay it off for us. How many people might have gotten out? They might have gotten out, or how many people thought that this was moving up still and they were buyers. And when this ended around and went back, they were buyers here, maybe waiting on a breakout and bought at the top. But we knew that direction was to the downside. So the downside direction had the momentum to pay us. Here's the Euro New Zealand. We're trading well below our 720 here. You look at my 200 moving average here, it never crossed my 720. So I would have shorted on this 200 here, even though the rate and all the other moving averages had jumped over. My long-term moving averages said, no, we're trading to the downside. And so we could have, it's a little bit contrary to what everybody else would be looking at, but from pretty much from start to finish today, the rate fell through the 720, fell through our 200 and gave us a profitable trade to the downside, right? Euro US, we're trading here below our 720. We can see that the rate and the moving averages are below, but the moving averages are not in order or anything like that right now. We've got a sell stop here that was placed by the Signature FX Auto Trader here because our rate is now above our 200. So the Auto Trader placed the order on the moving average 50, which is sitting right around the same place as the 100. Now we could take this and probably improve it to the 200 if we want to do that. So I'm going to go ahead and do that. I'm going to just slide it up here to the 200. If the rate continues to the upside, then we don't get involved in the trade. If the rate does, let's see, I don't feel like it moved, right? Okay, here we go. No, maybe not. I don't know why it's not moving. I have no idea why it didn't move, but maybe it's too close to the rate or something. I don't know. And they're not allowing it at this point. But my short, I'm happy here too. I don't care. It's just a few pips away. It's just a couple of pips away from that 200. But I could place an order on this 200, or I could place it on my 50 or 100 to short. If this move exhausts itself, the momentum should be to the downside. Pound Aussie, we're trading here well below our 720. But if you look at our long-term moving averages, all of them are still above the 720. The 50 is kind of hunting down that 720 right now as if it really wants to kind of jump below. And then it's jumped below the 200 as well. But the 100 and the 200 have a ways to go before they jump down. Now, we created a new low. So what are we thinking about? We're thinking about maybe breakout bounce. A bounce to the upside is our preferred direction, right? Because our moving averages, our long terms, are still above my 720. So it doesn't matter that the rate is down here. It's the moving averages and where the average price is. So if I'm going here, this is a little bit kind of slanted here. There's not really a box area that we can, clearly define. A lot of times it's very, very clear. Here's not one. So I just would pick like an area like this, just kind of shade it in there and go, okay, there's my box. If we trade back maybe to this high, then that's where I want to get in and be a buyer, as long as my moving averages are still above my 720. If they're up there, then we should actually go above that 720, right? So we'll watch that. We'll watch and see what happens with the Pound Aussie. The Pound CAD, here we go, almost kind of the same thing, not quite the breakout bounce at the bottom, but we can see where our 100 and our 200 moving average are still above our 720. And, the 50 is jumped below. So we may jump below here. So we're not going to do anything right here. If we're going to do anything at all, I'd place an order to buy here on this 200. Go right click trading and place a buy stop on the 200. Now, if the rate stays down here and the moving averages keep moving down and they jump over the 720, I just delete this order. I didn't get involved. Pound Swiss, we're trading above our 720 right now. All the moving averages are in order to the upside. We got, some distance kind of growing there. So we should, we definitely have a mature trend going to the upside. We're just waiting on pullbacks past our 50. We kind of got a little bit past the 50 yesterday. but we didn't quite make it to the 100 yet. So we'll watch this. We'll watch it, maybe put it on our notebook or our journal to say, okay, I'm looking for the pound Swiss to pull back because it's got a mature trend. So my idea is that it's going to trade to the upside. Pound yen, same thing. We're trading above our 720 here. Moving averages are a little bit out of whack here right now. So they may kind of straighten themselves out, but we're above our 50 right now. You can see where the auto trader placed an order on the 50, but it didn't place any more because the parameters for the auto trader were not met. So it didn't place any more orders at that point in time. Once these kind of jump over and get in the right position, it'll probably place another order. But we were trading down here below our 200. So we could have placed an order on this 200 to buy. And right now we'd have a bit of a profitable trade. It didn't take all that long for it to go profitable. As far as the pound US, same kind of deal. We're trading above our 720. We've got a full mature trend to the upside. It's just kind of young. It's trying to develop itself here after this nice pullback against it. We did get the pullback yesterday all the way to the 200. So we could have dropped our order either here on this 100 or on this 50. You can see where the where we got a buy stop order placed on the 50 by the auto trader as well. It placed it there. So as this came back, it would either cross this 100 and we would have been profitable pretty quick. And then it would have crossed the 50 and still would have been profitable. We could have got a few pips out of that. New Zealand CAD. We see we're trading well below our 720 here. We've got the rate right now trading right on the 200. So if we're placing any order, we're going to place one maybe here on the 100 for a short. We're going to sell stop there, just right in that area. Now you can see where we placed an order here. Previously a sell stop, the auto trader placed an order here on the 50 because that's what the auto trader is designed to do. Right. New Zealand yen, I'm sorry, New Zealand Swiss. Right now we are trading right above our 720. We've got the three moving averages, 50, 21, and 8, all above our 720, but our long-term moving averages have turned up, but not crossed the 720. So my interest right now would be maybe on this 100 to place a sell stop there. Right now, if the rate keeps going up, the moving averages jump over my 720, I delete this and I look for pullbacks to the upside. New Zealand yen, this kind of trying to do what the New Zealand Swiss was doing here. And we can see where the rate has jumped over our 720. The 21 is just meeting the 720. The rest of the long-term moving averages are well below the 720. I'd right click here maybe on my 200 and place my sell stop. You can always choose the 100, which is out here to be a little bit more conservative. It's just a few pips different. One's at 12, one's at 16. There's about 6 pips difference. For me, it's far enough away from my 720 where the rate would have to commit to a move downward. And if it does that, there should be that momentum to the downside. It's got a lot of room here too, because this bottom that we see here is right around the 73.60s area. So we're coming from well above 74, 74.20 or so. So there's probably about a good 60 pips or so that we could gain if we get a move back down to these lows. So it's possible. That's a definite possibility. New Zealand US, kind of the same deal. We've got this this jump over the 720 here. We see that the rate has jumped up above the 720. The two moving averages, the 8 and the 21, have jumped above the 720. We've got the 50, the 100, and the 200 below our 720 here. So if I'm placing an order here, I'm going to place an order to sell on this 200 or 100, maybe even my 50 here, because our long-term moving averages are below the 720. So this may forget, it may forget the move up and go back into its preferred trend. If not, and it continues to the upside, great. We have a move to the upside. We do have a buy here, not based on this auto trader, is just something manually that I did. And so we've got a trade going to the upside. I will lock that in as soon as possible because I feel like it's New Zealand versus the dollar. And I feel like the dollar is going to continue to weaken. So I feel like I feel comfortable with this trade taking it to the upside right now. US dollar CAD, So we're looking at a situation where we're trading below our 720. All the moving averages are in order to the downside. We kind of got breakout bounce, an opportunity to see if that happens. This is a nicer archway here that we can use as a bottom. So let's go ahead and draw that. We're going to draw our kind of rectangle up in there, right? Maybe something like that. And that gives us a nice target to kind of, a couple nice targets to hit there. You can see how it arches over just kind of nice. This is what I really like to see, where it kind of just kind of flattens out or just kind of rolls over. I don't like to see it kind of in a V shape. I like to see it roll over kind of in a U, and just kind of roll over there and then drop back down and try to test the low again. But this is dollar. So for me, I feel like the dollar is going to continue to be weak. I talked about that last night. We traded in the direction of dollar weakness, and we got a nice big move down here today. A lot of us got paid from that. So, that's a very cool thing as well. So we're going to wait now until we get a pullback, maybe past our 50, maybe past our 100, before we would short this US dollar CAD again. US dollar Swiss, we're still trading here above our 720. We can see that we had this move up throughout the day. Kind of breakout bounce, right? Because if you look at the low that was created here, we kind of rolled around here, checked the low again, didn't break it, and then bounced to the upside. So we kind of see that happening a lot. So, and we had this 720 to act as our support. So this is kind of visually, this was really going to be kind of easy for us as we saw the breakout bounce. We saw the low. We saw the 720 kind of hold it, even though it pushed past just a little bit, the 720 still was there. Traders are aware. It bounced, came right back down, tested the 720. And when it didn't really break the previous low, it bounced off to the upside. And that would have been the preferred direction, because all the moving averages, the long-term moving averages and everything are above the 720. That's preferred direction. So I can't really argue with what the chart is showing me. The only thing in the back of my mind is this dollar. So, so maybe I don't take this trade personally, but there's nothing wrong if you did that, because the chart's showing you that you could, right? It's giving you the direction. So, it's just whether you want to take that trade and how you're going to watch and manage the trade. Other than that, we still have, trade, our trade preferred direction still to the upside. So we could buy on this 200 or maybe on this 150, where they're converging right here at 88.92. That could be our buy point. It's not too far away from where we are right now, so I wouldn't necessarily force this trade. Our current bid, the current ask is at 88.90. So it's only 2 pips away. So I'm really not interested in chasing that. A little bit less than 2 pips, I think, even. So I'm not really going to chase that. It's dollar anyway. I think that it's probably going to come back down here and test this 720 again, and then may fall lower. US dollar yen, we can see that the yen traded back down below our 720 here. Our moving averages are kind of headed that way. Since I'm a dollar bear, I think that this should continue. Our 100, our 200 should jump below this, below the 720. But if I'm just going purely by strategy, then I would take my buy here on the 200, because my 100 is really close to the 720. We can come up here just with a wick and touch this, but my 200 is a little bit further away from my 720 for my buy. So I'm just doing it strictly by the strategy. I could do it that way. But me being a dollar bear, I'm just not interested in taking that trade to the upside. I think I would take it to the downside. I'm going to look for my setup to the downside. So I hope that you enjoyed our show. We're right at about 30 minutes, 33 minutes or so. And I did talk a little bit in the beginning. So you can see how quickly we can actually analyze our charts, look at not even one strategy, but we're able to even look for 2 strategies at this point. And we're able to analyze them very, very quickly, because it's extremely visual. It's extremely well, organized, because it's do this, do this, do this. Look for your 720. Where's my rate in relation to the 720? Where's my moving averages in relation to the 720? And then I know where my order goes if it's, if the rate pulls back. It's like a 3-4 step process. It's not that long. So it doesn't take you all night to analyze. You don't have to draw a million things on the chart. You haven't drawn a trend line. You haven't drawn a channel. You haven't, we did a little Fibonacci, but that was just for giggles, just to see how much it retraced. We didn't have to do Fibonacci. We didn't have to do anything. And how many profitable trades, how many opportunities did we have? And how many trades did we show you that could have been profitable? It's not a bad system at all, especially for a new trader, because you always will have something you can go back to. Even if you try something else and maybe you're not having success, you can always, have that one strategy that you can go back to and go at, I know this works for me. So I took a little loss here or whatever. I'm going to go back to my other strategy. I'm going to get that money up, and then we're going to see what goes on from there. But I know how to get that money back, so you don't really worry about it. And so I was seeing something, I think, on Baby Pips or something like that. I think I talked about this. I don't know if it was last night or this morning on a show, but just people being nervous, or if trading is hard. And then I saw one today about people being nervous and having fear in their trades and all that kind of stuff. And I just really thought to myself, I'm like, if you have fear in your trades, then you're doing something wrong. You're either sizing the position wrong, and you're sizing it too heavy for the account, or you're not following strategy the way that it's written, or the strategy that you're using is not well defined enough for you to be able to make a clear decision. And so you're unsure even when you place your trade. Here, I don't think anybody's unsure of exactly why we place a trade. And some of you have only been following for a few days and you already know how to do this. So that's why, I like this particular strategy, and I stress it, especially for the new traders, because I've got a lot of new traders that are coming on board and people checking us out. And I think they're finding that, and I got some peace of mind when I go to trade. I don't have to feel like I'm putting everything on the line and just kind of rolling the dice here. I don't have to feel like that. I feel like I know what I'm doing. And you're going to be heads and tails way above every other trader in the area of discipline, and you're going to be way above every trader in the area of confidence. And those are the two things that I can give you. That's why you get a mentor. That's why you get somebody who can teach you things like this and give you the understanding of how it should be done. And when you have that, you're going to win, man. That's, or woman. So I'm gonna go ahead and get out of here. This is Derek with the iLi Academy. I hope that you learned something here tonight. I hope that you got some opportunities to go ahead and trade. We're on, the backside of the week. It's already January 20th as well. So we're kind of heading down to the end of the month. I hope that your month of trading is going well. And we'll talk to you maybe in the morning on the daily market overview show. So I hope you can come to that. If you have friends or individuals who can benefit from the show, definitely let them know. I'd love to have them come on board. Okay. Thank you so much. Have a wonderful evening. We'll talk to you soon. Bye-bye.